Ho, 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 it's the Roger Sand Show, and it's Monday, December 22nd. And that means it's time to sell some cash secured puts. This is the wheel option strategy, the first part of the wheel option strategy. The second part is selling the covered call. So far, I haven't been assigned any stock yet because I've been selling pretty far out of the money puts here. But let's take a look at our favorite stock to do this on, which is Alphabet Class C, or GOOG, Google. Let's take a look at the Google options chain on Robinhood, and because they have a better visual, but we'll place the trade in Schwab. So right now it's set to Google buy a call. Let's change that to sell and change the options type to a put. And it's got the right expiration, December 26th. And let's see what kind of juicy premiums we can collect. Now, trading at $310.28 a share. If we sold the 310, meaning if we took on the obligation to buy Google at $310 by the end of the week, we would get $257 in premium for that. That's pretty good. But that means that Google could drop to 300 by the end of the week, and if it did, then we'd have to sell a call at 310, and we might not collect a lot of premium there. So I usually trade around the 80% chance of profit, which looks like it's the 305s this week. 307.50 is a nice one as well, but we haven't been assigned the calls. We haven't been assigned the puts yet, and I do want people to see how that would work. So I'm thinking I might take a little bit more risk for a little bit more premium this week, sell the 307.50, and that way if it does get assigned, you'll see the wheel strategy in motion where I can sell the call next week. So I think that's what I'm going to do. $158 seems pretty sweet. Let me put that into my calculator, see what the return on investment would be if I sold the 307.50. All right, so we've got our cash secured puts trade log, and this row right here that I'm highlighting is going to be the Google row. You can see I did a cash secured put on Robinhood stock earlier. You can check that video out. That's going to be up on the channel, but let's put in some numbers here. This table right here just is like the hypothetical. So it trades at $310.20. We chose the 307.50 put, which means Google only has to drop less than 1%. It has to drop 0.87% by the end of the week for us to get assigned, which is, that could certainly happen. And the premium on that, I think, was $162 a share. So that looks pretty good because that's a 0.53% ROI. And the way I'm getting this ROI is I'm saying, all right, the collateral that I have to put up is $30,750, meaning the amount that I would have to spend to buy those shares at 307.50. And I take that collateral and I have a $162 premium that I'm basically receiving on that collateral. So I'm dividing 162 by 307.50 to get 0.53. I then do an annualization calculation by just multiplying this number by 52 because it's assuming I did it 52 weeks out of the year, every week. And if I did that, I would get 27% return on this 30,050 invested. That's pretty good because this is cash. This collateral, it's cash. It's actually invested cash because it's held at a Schwab money market fund, meaning it's earning a little bit of interest on there as well, which is kind of nice. In fact, if it's earning about 3% interest and it never got assigned, that would be a 30% ROI, which would be very good. Now, anyways, I think this is a good one. Let me do one more peek at what else is out there. The one I usually sell, the 305s. So the 305s, I know you guys can't see it, but 305 gets you a $98 premium. So let's put 305 in there, and $98 drops the premium in half, or drops the ROI in half, excuse me. But it also pretty much doubles the amount that it would need to increase or decrease. In this case, decrease because it's cash secured puts. So Google would drop 1.67%, close the week on a negative. You'd only receive $98. Still annualized, 16.7% is pretty good. But you know what? I'm okay with this being a sign because I don't mind holding Google for a little bit. It has traded above 300 for a while now. Let's go to the charts actually and talk about this. All right, so here we can see that back in October, Google was trading at $250 a share. And then I think it was sometime around here that there's the announcement that Berkshire Hathaway had taken a stake in Google, and it just kept trading up, up, up. Actually, no. You know what? It was November. That's right. It was November when it was trading around 280 or so, and it might have been this jump here. This was the Berkshire Hathaway announcement. Since then, though, it seems to have been trading around $300 or so. Hopefully, it stays there going into next year. It's had a great run up this year, but I'm comfortable holding it, and that's why I'm doing the wheel strategy on Google. So I'm going to go ahead and place this trade. I'm in Schwab now where I do the trades. I'm going to select puts, and we said the 307.50. I'm going to hit refresh on here to get some quotes, and it looks like that premium's dropped down to 157 because Google has changed a bit, but I'm going to select anyways the that 157. We're going to do a market order so you guys can see it get filled, and we've got a put, sell to open, one contract expiring on the 26th at 307.50. Going to hit review and going to go ahead and place the order. Okay, so the order's been placed. Going to select it, and it should show us that it got filled at 158. Cool. So I'm going to log that into the trading log, and we will check back in on Friday to see if this got assigned or not. All right, it's now Friday, December 26th after market hours, and we can see that Google traded or closed at 314.96. And remember that our strike price was 307.50, so we did not get assigned Google. We don't have to buy it. The collateral will get released back to us, and the premium is all ours to go do with what we want to. And just to recap how things went, I'm going to go back to using Google Finance to look at Google. I like that. It started Monday, December 22nd at 311.21. Never really got to 307. Kind of just always every day traded above there. 311 on the 22nd. On the 23rd, 315. On the 24th, which was a shortened trading session, 314, and then again today it remained pretty flat around 314, maybe touched 315 just a little bit during the day. And there's probably thinner trading volume and less people selling. And what I mean by thinner trading volume is all the folks on Wall Street, all the people doing these trades or monitoring the algorithm that are doing these trades, were probably on their vacations, skiing in Colorado, in Vail, or going to Lake Tahoe, or, skiing in Switzerland or the Alps. So they didn't have time to kind of sell or really buy Google, so it was just trading flat, and that was good to see. So this turned out to be a nice one. I'm going to go ahead and preview next week, and we're going to switch to sell a put, and we're going to look at January 2nd, and that'll be, it says 7 days out now, but when we place the trade, it'll just be 4 days out. Doesn't look like the premiums are too too nice right now. You look at the 307.50, only paying about $86. So it seems like this is a bullish indicator for Google that the premiums aren't that juicy right now. So we'll take another look on Monday, and maybe if shares are trading down, these premiums will increase because there'll be more desire to protect the downside, and so people would pay a little bit more premium for that. But that's what we'll be looking into next week. So take care, everyone, and see you in the next video.